Okay, so if you bought a multifamily investment property in 2021 or 2022, I need you to watch this entire video from the start to the end because right now there are many multifamily investors, investors in commercial real estate, industrial, even across the entire country, especially Austin, Texas, here, who are sitting with properties that are just quietly bleeding equity through loss of cash flow, NOI, and they just feel lost and don't know what to do next. That sounds like you. Please continue to watch to the end, or if it's someone you know about, maybe you're a vendor, your accountant, attorney, whatever it is, a banker, and you know someone like this as well. So right now we are seeing higher vacancy. Expenses are going up faster than rents across the board. I don't care whether it's industrial, retail, multifamily, or office. We're seeing it. Inflation is here. And many times loans are starting to come due as well. And it's becoming a decision making point to where you're feeling like, as an investor and owner, you may have made a mistake. You bought 3, 4, 5 years ago at the high, and now you're wondering, what should I do? First off, I want to say right now, the investment, the decision wasn't a mistake. It was just bad timing. It happens, it's bad luck. The biggest mistake right now is doing nothing. If you do nothing here, you're going to get nothing. And so today, I'm going to spend a little bit of time going over the exact framework my team uses to help owners and commercial real estate investors get off the sidelines, understand their true position, and start making just intentional decisions about how to manage their commercial real estate and get back to even or make more money. If you stay till the end as well, we're going to have a free decision making matrix here. You can download, just drop a comment below. Matrix, we'll get to right now. If you want to get past all that, just do right now. Drop matrix below in the comment and we'll get you our decision making matrix of what we do. So, who I am, my name is Jared Huseman. I'm a CCIM designated commercial real estate broker. I'm the founder of the Catalyst team here in Austin, Texas, also operating in Des Moines, Iowa as well. We're operating under the KW Commercial brand here. I personally own over $15 million of commercial real estate. I've been doing this for 15 years. Additionally, I've negotiated personally over $125 million of deals. Not a team, not through someone else, not puffing that, legitimately me, myself, I can break it down right now. And again, I am a CCIM designated certified commercial investment member. The reason I say that, it's a professional designation in commercial real estate, and less than 10% of commercial brokers have it. It means we specialize in investment real estate. We have financial models, Excel sheets, numbers that we use to help all of you in commercial real estate make more money, higher returns, higher cash flow, and ultimately build wealth in commercial real estate, which is what we're here for you as well. We work with multifamily owners, commercial property owners, industrial, office, everything. And we specialize helping personal, individual people scale up and make more money in their commercial real estate. Now, let's talk for a little bit, for a few seconds, on what's happening in the marketplace right now in 2025, 26, coming into a little bit into 2026 here in 2027. The market has changed drastically. We all know this here. We all know that in 2020, of course, COVID hit and we put a lot of money into the economy. 21, 22, 23 was just a boom time. Everybody was making money here. Interest rates were historic lows. Capital was cheap, sub 3%. Values were going up. And just everybody was looking to get in. Every deal looked like a home run, and people just bought. They had money to spend. They wanted to put it to work. They didn't want cash in the bank, and it became aggressive pricing, especially in Austin, Texas here, where we really saw a population boom, economy boom. Everything was just going great here. What also happened was a lot of investors, maybe yourself, used floating rate debt or short-term bridge loans to make the spreads make more sense. Right there at that point, cap rates were so low, interest were so low that maybe you did some bridge debt or some short-term financing just to make the deal work. And of course, at that time, rates were around 3%. Now, of course, the Fed Reserve in less than 18 months raised rates from 3% to 7%, and the whole market just hit stop. It was the fastest rate hike in 40 years. This goes back to what I said earlier. You're not a bad investor. It wasn't a bad investment. You just got unlucky. You had something happen that has not happened in 40 years. It's not your fault. It's just the market hit at the wrong time. And all of a sudden, the math wasn't mathing. It wasn't making sense. And here in Austin, again, I know that a lot of investors were just looking at everything going, oh crap. especially as all the supply come online for industrial and multifamily. Those were two big, highly developed asset classes here in Austin. We saw thousands of new apartments and multiple millions of square feet of industrial get built. And it's all hitting the market in 2025, 2026. And it's really putting a lot of pressure on owners, especially smaller investor owners who are competing with big national companies and REITs to compete. They have scale. They've got hundreds of units, thousands of units here, and you're really feeling the struggle to compete with them as well. And this is creating three huge issues for you right now. The biggest issue is one, again, vacancy is high and you can't compete. But really what's happening is expenses are rising faster than rents. Right now, insurance alone and taxes have increased between 20 and 40% in the last 5 years. Okay. So we're really seeing tax insurance go up and you can't control that. The three big things we can't control: taxes, insurance, interest rates. All three have went up 20, 40, 50, 200% in the last couple of years. It is destroying your NOI, your net operating income, your cash flow, and it's hurting. Okay. The other thing that's happening, of course, is cap rates have changed. As cap rates tend to follow interest rates as well. Cap rates that you were buying in 21, 22, 23 were at 4 or 5%. Now it's a lot closer to 6 or 7% capitalization rate. And your cash flow is being drastically compressed, mostly because of the debt. Again, the three things: insurance, taxes, and debt. Your debt service now was underwritten at 3%, 3.5%. Now it's going to be underwritten at 6 or 7% as well. And it's making it hard to make net cash flow. And that creates the third one as well, as the debt maturity. Most loans, of course, commercial real estate, have 3, 5, or 7-year balloon payments. It's just common to have. You amortize out over 20, 25, or 30 years, and you have a balloon payment. That balloon payment is coming due now. 2026, 2027, 2028. We are going to start to see a lot of these loans, these bridge loans, these short-term loans mature. They're coming together here, and it's putting pressure on all of you to make a decision. I get it. It's tough. It's challenging here as well. But this is the environment we're in, and we have to do what we can to make the best decision for it. We can't change the past. We can't change what's happened, but we can do what we can to make better decisions for the future here. So what do you actually do? Well, here at the Catalyst team, we look at everything through an owner-structured investment and assessment here before I make recommendations. We really look at 6 different decisions that you could do. Number one, do we hold and optimize the property? Is there a possibility to look at fundamentals, manage the debt, and just hold and optimize? There's a saying that there's no mistakes in real estate. Just give me a long enough runway here. Okay. Any plane can take off long enough runway. Give me enough time. I can always make more money. So the first option we at the Catalyst team always want to look at is, can we hold and optimize if that fits into your goals? That means looking at the management, the debt, the property itself, lease up strategy, and just the timeline and where you're at. The second thing we need to look at is, can we refinance or restructure your debt? Your debt's probably coming due. What does that look like here? What are banks actually doing right now? Maybe what's a BOV? What is going to be the value when that bank wants to refinance here? Will they do a 60% loan to value, 70%? We need to understand these things here, and also understand the refinance based upon the market cycle we're going to be in when that comes in 2026, 27, or 28 as well. The third option, if we cannot own outright for long-term or refinance, maybe we should sell. Sometimes selling is the right method here, but we want to make sure we're looking at that with all options, including, are we going to sell? Are we going to pay taxes? Are we going to redeploy the capital in something that works? It doesn't mean we're going to just sell for one reason. Let's make sure we're selling with a strategy, because the worst thing you can do is sell low and then go buy something else that makes worse financial sense or makes less money as well. So we're only going to sell if that strategy actually makes sense for you. The fourth thing we can do, of course, is sell and then go into a 1031 exchange. If you have equity, again, if you sell outright, you have no equity, we're really struggling, excuse me. We could sell via 1031 exchange. And if you have equity, then we could maybe go into a stronger asset class, make more money, maybe a DST. Maybe we switch asset classes, go into retail or office or industrial. If it's opportunistic, we could be office space. There is some opportunities there as well. We can maybe look at different markets as well. It could all be options as well. This is where the CCM advisor like myself is going to help you figure out the best methods for you, your goals. The fifth thing we can do is reposition or renovate the property here. Maybe the property just needs to be repositioned. Maybe we need to put some money into capital improvements. Maybe we need to do a value add strategy and focusing on the rents, repositioning tenants. You can do that in multifamily or retail, industrial, office. All three, four classes, you can do it. You can change tenant profiles, change lease structures, increase rents, decrease expenses. There's a lot of things we could do to reposition your property, because we can talk about that as well in a one-on-one assessment here about your individual goals and property. The sixth thing we can do, of course, is restructure the property, restructure the debt. That could be a Chapter 11 bankruptcy, quite honestly, or it could be talking to the partnerships. Maybe there's some buy downs happening. Maybe another partner wants to buy someone out. Limited partners, general partners, a lot of different options there as well. So we could look at restructuring the partnership. There's a lot of different things. We don't want to go with a gut feeling. We want to put all of our analysis here, look at all of our paths forward to find the math and the path that works for you. Again, the math is the path. The math is the path. Let's use the math to create the path to make more money. Let's do a logical decision, not just a knee-jerk gut reaction as well. Now, if you want to actually see my decision-making matrix here, I'm going to do a quick share for anybody that's out there still watching and wants to see what it looks like. So this is our commercial real estate investment decision matrix, and it just goes through. It's very short. It's about 5 pages long. It should take you about 15 minutes to half hour, something we can go through with you, or we can talk about as well. Now, if we zoom in here, the first thing we're going to want to do is we're going to want to score your property. So if I zoom in, you can see you're going to ask the questions. How's your cash flow net operating income? Is it 0, 1, 2, or 3 points? How's your current NOI trending in the last 2 years? Flat, up, stable? Current vacancy rate, again, let us know. And all you're going to do is just kind of circle one on your own or thing. Am I at 1 point here? Maybe I'm, at 7% vacancy, so I'm 2 points here. You're just going to go through this here. And as you go through the first page, you're going to add up all your points. And at the very bottom here, tally 2, it's going to be scoring it. Where's your cash flow on a score of 0 to 12? Where's your debt equity? 0 to 12. Market conditions, 0 to 9. Management and operations, again, 0 to 9. Then we're going to talk a little bit about your owner goals, investment horizon. Again, what do you want to do? Exit as soon as possible, 1 to 2 years, 3 to 5, or hold for long term. That's going to be here in your owner goals analysis. And then your total score added up together is out of 54. Now, once you have your score of 54, you're going to go into the recommended path. And recommended path is just my personal opinion of what you should do. Evaluate exit strategy now, refinance, operational optimization, strategic hold with active management, or hold and scale up as well. And then as you do that, we're going to just go down and look at real quick here, regardless of your score, look at your rent roll, look at your loan maturity. Do you need a BOV? We can help with that as well at the Catalyst team. Just give you an idea of today's market in case you want to refinance, sell, or just put it in for your family, your friends, your partners, whoever it may be. Let's look at your quick trailing 12-month profit and loss. It's a T12 for any of those who are not used to using these terms. We can assess your property management as well. Are they doing good or bad? This is for commercial or multifamily. Identify deferred maintenance. Clarify some goals. Sometimes the hardest part is figuring out our own goals. I know me, myself, my goals change. Sometimes figuring out your own goals is the most important thing. If you have partners, that can be a challenge as well. Partners can include not just business partners. It can include spouses, friends, family. How do we want to do that as well? And then as we do it here, we're going to have the final fifth framework here, the 3 to 7 year return framework here, which is questions here you can ask yourself. Can you grow your NOI 10, 15% for the hold and optimize? Can you lower rate or extend term for refinance, et cetera? And all that's going to do is help you better understand where you're at, what your potential goals are, and what you could or could not be doing here. So to get a copy of this here, comment matrix below, and we will get a copy of this to you here so you can actually use it to make some money in commercial real estate and hopefully reposition your property as well. But here's what I want you to understand that we do here at the Catalyst team. We're not just listing brokers. If you can't tell already, we're investment advisors for you in your commercial real estate. And that is a big difference here. Okay. We're not going to be used car salesmen, just selling whatever you want to sell. We want to help you all make more money, very personal, one-on-one. Again, we deal with a lot of individual investors or small partnerships as well. We want to help you ultimately make more money in commercial real estate. And I know because that's how I felt. That's how I wanted to build the Catalyst team, because I am a commercial real estate investor. I have been since 2009. And I always wanted to have a broker who helped me make more money here. And so what we're going to do is do an initial assessment investment. We just went through it here. Understand you, the property, the income, the tenant profile, lease structure, location, the market cycle, where we're at, submarket, and really make sure we understand everything, the debt, all of it, all we need to do so we can help you make the best decision. This conversation usually takes about 30 to 45 minutes. Again, we just went through a kind of a quick example of it. We can go through it more one-on-one as well. It's all for free. We don't charge you for it as well. If you do want to do a 30 to 45-minute session with me and my team, again, just comment below meeting below, not matrix. Matrix below will be for the matrix, but for meeting below, and my team and I reach out to you to talk about a 30 or 45-minute meeting as well. Or if you do the matrix, my phone number and email are both in there as well. You can also download the matrix, contact me, and we'll do a quick 30 to 45-minute session for you. Totally free, complimentary. Don't need anything to do as well. So what you need to do, step 1, 2, or 3, whichever you want to do. First off, if you want the matrix, drop a comment below matrix. We'll get you the full CRE investment decision-making matrix PDF, helps you score everything as well. If you want to talk further, again, download this, drop below, just say meeting or download the matrix and email me, text me, and we'll put together a meeting as well. And if nothing else, subscribe. Okay. Third thing here, if you just like this, thought it was good, at least subscribe to this channel here so you can get more information on commercial real estate investments in Austin, Texas here. That's all I have. This is again, Jared Huseman, Catalyst Team, KB Commercial Real Estate here. And I want to help all of you make more money in commercial real estate. So we will see you all and talk to you all very soon.